Welcome to Leveraging Hard Money in 2021. My name is Joe Scarice. I am a mortgage lending specialist and the moderator for this evening's event. I look forward to having you. Look forward to taking a look at the podcast and getting education, networking, and creating opportunities. Thank you.
Hi, I'm Eric Laws with MB Capital Solutions. We specialize in helping real estate investors and small business owners obtain access to opportunity money. Our niche is in the unsecured revolving line of credit space, helping investors get gap funding for down payments, for rehab, for renovation costs, and for working capital. We look forward to helping you out when you're ready. Like I said, our specialty is at $50,000 to $150,000 of unsecured revolving lines of credit for your business.
Hi, my name is Marty from Express Capital Financing. We are direct nationwide hard money lenders. We specialize in fix and flips and buy and holds. You can reach us at expresscapitalfinancing.com or our main direct number at 718-285-0806. What we do is any city, any property, any type. We're not credit sensitive, no financials are required, and we also provide now 100% financing, transactional financing. So give us a call, love to hear about your deals, and we can get you funded to a celebratory closing.
What's going on, everyone? It's Ryan from Hard Money Bankers. I'm a direct private local lender in the New Jersey, PA, Delaware area. If you're looking for a fast closing, I can close in 24 hours. I don't use appraisals. I'm as close as you get to calling up a buddy and saying, hey, what can you do on this deal? That's what we do for you. Feel free to give me a call. My name is Ryan at hardmoneybankers.com, 201-345-1036. Appreciate it.
Hey, how you doing? My name is Gabriel Kleska from Builders Trust Capital. We are a hard money lender, and what we actually like to lend anywhere from $75,000 to $10 million. We do anything from short-term loans to 30-year fixes, 1 to 4 units, and some mixed-use properties. We're pretty much in about 48 states, but our primary stomping ground is New Jersey and PA, Virginia, Florida, those areas. So looking forward to this event, and hope to see you guys soon.
I'm Nick Bianchini, Senior Funding Specialist with DLP Capital. DLP Capital is more than a lender. We're a true capital partner. DLP Capital is a multifaceted real estate company. We've flipped over 1,000 properties, own over 15,000 units, and have $1.5 billion in real estate. We are true operators, just like you are, and we're here to partner with you to provide you the capital that you need to scale your business. I'm a Senior Funding Specialist in this company, been here for 5 years, can provide you the tools and resources that you need to complete one flip for $50,000, multifamily for over $500,000, $500,000, or even $5 million plus projects. We can do it all, no matter what your experience level is. We're here to help.
You want to do it quickly.
Hi, my name is Kyle Alston. I'm with Progress Capital. Progress Capital is 3 arms of business. Progress Capital being the main arm of the business, which is a commercial mortgage advisory business. We arrange capital for real estate owners and developers. Progress Direct is the branch of the business that I operate under, which is a direct lending company. We offer hard money loans and commercial bridge loans. The 3rd arm of our business is Progress Realty Partners, which offers investors a way to invest in real estate passively. If you have any deals or want to discuss investing in real estate through a myriad of different options, I'm here to discuss them.
How you doing? My name's Mike Lista. My company is Crowd Lending Inc. My personal website is phillyhardmoneyloans.com. We're a local direct hard money lender. We provide fast, flexible, and direct funding for the acquisition and renovation of investment and commercial properties. Our main product is a fix and flip loan for single family, multifamily, condo conversions. We also fund ground up construction. I would say something that separates us from other lenders is the hands-on personalized service we offer. I'm very boots on the ground. The investor deals with me throughout the entire process, from underwriting throughout the loan process through the rehab process. I actually come and see the rehabs and take photos. Nice to meet everyone. Thank you.
Marty, then we're back.
So to get us started off, how does your company feel about the market in general? Real estate and macroeconomic real estate expected to come down?
It's a great question. And I want to add to what Joe was saying before, that he said about 40% of loan applications are dropped down. And my perspective is because the millennials are the supposed buyers in these days and they can't afford the prices, so they're forced to rent. So that's why the rental products, the rental programs, the BRRRR is the best way to go, today, because a lot of people can't afford to buy these homes to live in, so they're forced to rent, and that's where us landlords make a lot of money. My perspective of the market, look, we all thought it was going to crash, we all thought a lot of things, but more capital came into the market. Lenders are here, we're ready to deploy capital, we're ready to get your investment deals done. Look, it's kind of soft in the market a little bit, prices are coming down a little bit, so it's going to get more active out there. You got to be in it to win it. Foreclosures have not happened yet. Some states have opened up their foreclosure, the courts have opened up, but the properties haven't hit the foreclosures yet. So there's going to be great opportunity when there's uncertainty. In my perspective, it's going to be a nice 1 to 5 year while to do business.
Yeah, we're kind of always doing a little bit with the market as lenders, just because we're always protecting our money. That's what we do first and foremost. So you're always preparing for a crash. That's the way you always do. Whether it's today or tomorrow, we can't predict that, but we are preparing for it at all times. So COVID made things interesting for a good 2 months, maybe I'd say, in the market, and then it came right back up, and everybody forgot what happened. But for a minute there, people were really scared, especially when you're in the money world, you're the first to feel it because the banks are saying we're pulling our money, right? But that never really hit the real estate market right? We all know that over here. What's going to happen over the next year? I do think the huge spike is over. We saw 25-30% profits that we saw on houses. I don't think it's going to get another 25-30% here. Could it? Absolutely. But it could also start going the other way. So, we just prepare for worst case scenario all the time. We keep our numbers 65 ARVs. Imagine that we're going to do a lender. Sometimes we get close to 70, maybe 75 if they're super aggressive. But it's always in preparation of what's the market going to do, because I don't know. I can't tell you. I always have something on my shoulder saying it could go tomorrow, it could go tomorrow. So that's why we always say to our borrowers, make sure you buy low. Just buy low all the time, regardless of the market.
What he said is actually correct. He doesn't know. I don't know. No one has a crystal ball on what's going to happen this quarter, next quarter, where we're going to be. But one thing we will tell you is that we're very optimistic. Based on what we're seeing with the market, we don't see a major change in the direction and trajectory of where we're going. There's a lot of influx of people that are moving up, that are migrating from New York City. If you're in Philly, they're going to Philly, they're going to different areas. And like what Marty said, the BRRRR method seems to be probably a method of choice at this time. There's going to be a lot of people looking for rentals. The millennials that's coming in, they're not looking to tie into to get themselves tied into a property long term, so to speak, not a lot of them, so they want rent. And but the market is very bright for all investors that are looking at picking up properties and again put tenants in there and when they want to commit to it. My theory is that with the funds, the money being as cheap as it is right now, now is the time that you are thinking about getting into real estate. Now is the time to do it. Who knows how long this is going to last? So I would say this is the time.
Yeah, it's a great point, Stan. There really is no way to predict. We're certainly very positive in the outlook of the market right now. I'll give you a quick story. 5 years ago, I stood in a ballroom, I forget where it was, with my CEO. We were holding a capital dinner. Back then, they were much smaller dinners, but he stood up in front of a crowd, which are investors or prospective investors, and said, in the next 2 years, DLP will be making a shift and selling off our single-family assets and moving into multifamily properties. We expect the market to shift where there will be distressed multifamily properties becoming available, and as any good real estate operator knows, you're buying distressed properties and adding value, and especially in multifamily, right? So we have pretty much sold off all of our single-family portfolio, which was thousands of houses. And like I said, we now own over 15,000 units, which are all multifamily properties. In the last quarter, we acquired 25% of that portfolio. So we grew 4,000 units just in the last quarter alone. So this is becoming a rental nation. And at some point, we predict you might even see a 50-50 split from renters to owners to homeownership. So again, making the same point, the PER strategy, if you're looking for a business model, that is your execution model. You need to find distressed properties, build some value into them, cash out, and continue that method over and over again. And you will start seeing yourself executing on 2, 3 properties at a time. And I wanted to make one other point. There was a comment regarding I had my notes here. So the mortgage, we were talking about the mortgage forbearances, that type of thing. So when that mortgage forbearance ends, we're going to be seeing the foreclosures. I apologize. I think I never did this before. The foreclosures, yes, you're not going to see a foreclosure spike anytime soon, but probably in the next 12 months, I'd say late 2022 as the mortgage forbearance ends and then the courts start picking up the cases, and we know how slow the courts work with these cases. But you will start seeing them become more and more available by the end of 2022. My suggestion is you get your cash and your financing in place now and start building a relationship with a lender who's going to help you capitalize when that time comes. Because if you're getting in the door then, there's going to be literally thousands of people who have already beat you to it, and you're going to want to get yourself in a position now to get ready for that.
Another million released forbearance into active mortgage status. Next month, up and above the first one, another 2 million. 780. They're saying on data it's 780,000. They're probably lying by about 20,000. So let's say a million. Okay, so
That are still in forbearance.
they just released the second wave. They're out of forbearance. So that's the second wave. There's 2. The first wave was about 600,000, 700,000. That means the village might be 900,000. The media doesn't want to really know the truth. So let's say both 2 million homes across the country are going to be in some form of foreclosure, short sale by the end of September.
Just to let you know, statistics were in the height of COVID was 4 million, so that's a good sign that 50% right now.
Well, and another thing you got to think about the wholesalers, the guys and gals that are shopping at deals before realtors and gets to see them, they're going to be your best person in your power tool. Okay, because now they're forcing licensing across the board in the cities now for wholesaling. So wholesaling is an industry because the government sees that as a tax grant, a sales or a use tax grant. They're not being dumb about this. This is a sales and use tax grant. If you're not familiar with that, if there's sales, they can capture taxes on it, at a closing by the wholesale assignment. So that's what's going to get caught and extracted income. That's the play in the states. You capture a lot of money in loss, and I think they're going to legalize marijuana. I'm hoping for that.
How about you saying it's going to force wholesalers to become realtors?
No, it's going to force us to recognize wholesaling as an industry. Because they're spending 10 times more money in marketing and social media than an average realtor. End of story. Okay, there's more money being spent on that. Correct. We're going to actually have a discussion at RVIA, third Wednesday in November, with the license executive, how to get licensed in Philadelphia as a wholesaler with 3 wholesalers. We haven't identified the wholesaler yet. We're going to get the most legit ones. So I'm going to go to the department banker and ask them to introduce me. I'm going to appreciate that. Anybody else that has who they feel is an interesting word, an integrous wholesaler. The Philadelphia market that's licensed, I'd like to know that.
Market.
Macro.
Sorry. Yeah, we went off on such a part. I'd say buy Dogecoin.
You were fucking with the marijuana.
Yeah. I'm sorry. Yeah. No, just kidding. Yeah, I mean, no one knows what the market's going to do, but fortunately, underwriting works. You know, whether it's you underwriting your own deals or having lenders underwrite your deals, it works. There's a reason when you look at condo inventory why people do rental fallbacks, because rental fallbacks is a fallback if you plan on flipping. So we're not concerned about the market. I don't think we try and rub a crystal ball and know what the market's going to do. When things turned down in March of last year, we kept doing what we were doing. Luckily, we've been in business for 30 years. So on the brokerage side, when banks were backing out of deals and hard to get in touch with because they were so busy with PPP loans, we had to roll the decks to go and call the decision makers and get things done. On the bridge lending side, we also had to step in for a few people that were just doing simple acquisition loans. There was Dollar General we stepped in on, and Cube Smart, where the bank at the 25th hour backed out and we closed in a few days. So I don't know what the market's going to do. I don't necessarily care because we're going to keep doing what we're doing. Underwriting works, and we've been through it before. So it's just a job gets a little bit harder. You have to work a few extra hours longer, but we'll get things done, and life will go on and it'll rebound.
Yeah, I mean, I don't think there's going to be a meltdown necessarily, but it's definitely shifting buyer investor market. I mean, mortgage applications are at a 3-month low. Personally, I'm selling my house. I live in kind of an up-and-coming trendy area in Philly, Fishtown. So I'm selling just because I definitely see it shifting. I don't see a huge shift, but gradual. And everything after all those guys.
Listen, this is also this is also a regional thing. This is
this is not everywhere. You go to Florida, it's a whole other market.
Right, I was just telling Joe and Eric. I just spent the last 10 days in Florida, and I mean, like, people would see me wearing my shirt, and they're like, people are out of the woodworks in Florida.
Philadelphia has been traditionally a recoverable city faster than the national average. So they recover typically a year earlier than the rest of the market. But if you look at Florida, North Carolina, Texas, I mean, we're talking about some very aggressive states. I mean, top 10 rental markets. I mean, you can't buy anything in Idaho. Idaho is done. You would think that there's potatoes out there, one of the hottest rental markets, investment markets. Some values went up by it's great.
28% in
So this is going to be a very razor sharp impact. Your Boston's, your New York's, your New Jersey's, they're going to suffer. They're going to suffer today.
Just to piggyback on that, one thing I realized is that obviously everybody knows that real estate it works in cycles, right? So I remember back, and I'm also an investor, so I remember back in 2007, I owned like about 20 doors at the time, and I thought real estate was done because the market crashed, everybody was losing their jobs, it was just crazy, the sky was falling, and I said, this is going to take a while to take. I'm out of real estate for a while. Like I tell you, I wish I held on to this spot. I sold all my property before the market crashed. I was lucky. I was one of the lucky ones. I wish I held on to those properties. Because the same properties I sold back, I was selling for like 120, 130, 160. Those same properties are selling for 450, 500 at this time. So one thing I noticed is that real estate, even when it crashes and it corrects, you really, if you hold it long enough, you're bound to make money. So that's why it's really one of the things we're talking about underwriting. It's one of those things where if you buy right, you really can.
We'll go back to Marty. The next question.
So next one we got, can you just talk a little bit about your existing loan products are, your company, as well as the new offerings that you're rolling out in 2021 or will be rolling out in 2022?
So, like I said, we do fix and flips, not just one to fours. We can do multi-families, mixed-use, shopping centers. And by the way, hard money is not hard, it's just a hard asset. So it's very quick, it's very easy. And a lot of investors, they call me up sometimes and they say, I'm getting money from my uncle and all that. And I don't want to pay points, but I say to them, is your uncle going to look at the deal and make sure that it's profitable? successful for you so you can make your profit and pay back your uncle. And what happens if your uncle doesn't have the money to do your second deal, your third deal? What happens if you can't even pay your uncle off? You just lost a great relationship. So when a lender has these costs, the fees, the interest rates, and the origination, it is worth it because it's bringing a value, which is not only lending you the money, but it's your second set of eyes so you can grow your business and scale your business. But as far as what products we launched, so like I said before, we're doing transactional funding. If anybody wants to buy something and sell it the same day, we're doing also 100% financing for qualified borrowers, 700 plus score, 7 deals plus done. And the rental market that we call the rental 360 is very hot, very, very hot. It took over it used to be 20% of my business last year. Now it's like 50 to 60 to 70% of my business. And whether it's a 1 to 4, multifamily, or mixed use, or whatever it may be in the permanent. So that's what we're doing. We're launching more on the permanent side. We're also doing construction, ground up, single family, up to 100 units, up to 85% of the leverage on the land. If there's an existing property on there, 100% of development, as long as it doesn't exceed 70% of the fair value. What's hurting this market for us as investors is not enough inventory. So hopefully the construction will increase because we need to get to at least 1.5 new builds a year.
Yeah, so we're in our box of short-term funding. We pretty much focus solely on speed. So if you're looking for a really fast turnaround, whether it's the closing, withdrawals, whatever it is, speed is key with us. So we haven't really changed our products actually because of the market even since COVID. We've actually stayed where we are. We would adjust if we need to, but with our niche, honestly, the leads, the pipeline, it's kind of all stayed the same for us. Which for us, we're very grateful about that. Right? We can suffer like many realtors have in this industry. Because if you need to close fast, it needs to close fast. It's kind of more situational than it is a price war with us. In fact, if you're price sensitive, you're probably not even looking my way. The only change we probably did offer or add is we are now $11.99 if the loan is above that. So, probably most of my competitors here don't even reach $11.99. So, speed is key with us. It's the only time we make sense for your business. If you're looking kind of a 2, 3 month, 4 month project in and out, that you're looking for a lender that can hold that kind of speed, that's what we're here for. So, yeah, honestly, pretty much everything's still the same.
All right. We actually have 2 buckets that we have short term. Basically, do anything usually for 1 to 4 families. Short term, we do 90% LTO, loan to cost, or even 100% loan to cost if you actually qualify, 100%. We also have what we call cost collateralization products. So basically, you have a product property ready that's free and clear, and you don't want to use your cash. Well, we can use that property as collateral to purchase another property. Not too many lenders would like to do that. We can do that for you, so we can actually turn your money over and over again just by using the same property over and over again, and not have to cash. Okay. We also do for the long term, which is 30 years, do something what we call it's a refund product, which basically what it is that it's a rate term plus refund, which means there's no seasoning on that. So you could buy the property, and let's say you bought the property, you invested $100,000 on the property, you renovated the property, and you want a 30-year fix, we can give you a great rate and basically give you all your money back for the property, so you can reinvest in another property and put you in a 30-year fix, which is the rate till now, as low as 4 and 4. Okay, so we do something like that. We also have the Airbnb product. Okay, so a lot of people don't want to get into the Airbnb, right? So we have that product for you. Which what's great about that is that we don't really use a traditional way of your income from the property because we know it's a seasonal property, right? So we use a higher end. Basically ask the appraiser, what do you think an Airbnb would go for? It's $3,000? Well, then basically we'll qualify for that $3,000. It makes it a lot easier. You go ahead clients we have the traditional, just regular, hard money and everything. We pull our portfolio in-house. We also have, different outside the box products. If you want that,
Awesome. Yeah, so we are national private direct lenders. So we finance everything from your $50,000 fix and flip to your $50 million multifamily property. So we have a wide spectrum of programs we can offer. So we're talking bridge debt. My most popular product is what we call our line of credit product. It's not your typical line of credit where it's like a liquid line where I have to give you a checkbook and you just go buy all your stuff from Home Depot or go buy a house. I wish I could give you that, but the line of credit for us is basically a guaranteed amount of money. We typically have $2.5 million, $5 million, $10 million, and up to $25 million lines for our borrowers. So this is basically an upfront pre-approval process. We still close deals individually, so the property itself still has to make sense. Obviously, you're the investor, you want it to make sense. But we do a one-time personal underwriting, so we eliminate the credit pulls and all that stuff. Our goal, again, is relationship building. It's kind of what I mentioned, when we talked about the market that's coming up. We want to find people who are willing to build a relationship with us and us with them, and that we can guarantee money and capital out to them for their projects, and not have you go through the hassle of, found a great deal, I need to close, where am I going to go to get money? And have your credit pulled over and over again. So you already have funds available to you. We also do take out financing, 30-year fixed, 5/1, 7/1 arms based off of 30-year amortizations. We are going to be very soon offering a one closed loan, very similar to the refund product. It's very interesting, by the way. So our one closed loan is going to be basically a rehab property that you're going to want to refinance and cash out, except we're going to do it all in one loan for you, so you don't have to worry about the seasoning period anymore. You don't have to worry about a second appraisal and all that. We just go right through one process, keep everything in one loan. But again, we do multifamily properties, 5 units and up. We also do a variety of commercial projects. I have two hospitality term sheets out right now, one for Sheraton, one for Marriott. So again, I can do your 1,000 square foot fix and flip. I can also do your 200 unit hotel if you're interested in that.
That's a good question. How long is the line of credit?
Typically, it's a 1 year, and then we just have typical renewal process. Okay.
Yes. Oh, there's a question back there.
Okay. What is there a cap on the doing 1 year? It's like
We're going to do Q&A when we get to the questions.
Sorry.
Please write it down so you don't forget. Okay, so I'll come to you first. I'll be great for you.
I took over moderating.
Thanks. Have some powerful
Yeah, I just saw a point. Like, yeah, go ahead.
It's all good. It's all good. I've been fast over a long time.
Yeah, so I'll try not to go on too much. I mean, fix and flip wise, very similar programs to some of the things these gentlemen are talking about. We can get somewhat aggressive on rate for well-qualified borrowers. We can get as low as 8%, in certain scenarios. Typically, most of what we're writing is between 9 and 10%. I'd say the one program or part about our loan programs that sets us apart from people here is we're more commercial-focused lender. So our sweet spot product-wise is more commercial properties from the $1 to $20 million range. We look at all types of assets. I have office building. I have land right now. Storage facility. All over the place. So if it's commercial real estate, that's something that we focus on. But we do also a good amount of fix and flip business as well.
And we focus more on residential, fix and flips for single family, multifamily. I mean, there's really no cap on the multifamily. Every deal is case by case. Condo conversions, we also fund ground up construction. Typically, we're about 85 to 90% loan to cost, 2 to 3 points, 10 to 12% interest based on experience. Our process is a lot easier than most. Minimal paperwork. We're not looking at tax returns. We're not asking for bank statements. Pretty much your LLC docs, the purchase contract, your scope of work. We do value experience, but we will work with a first timer. Every deal is case by case. If a first timers that I do work with, I usually, obviously we want everyone to have an experienced contractor, but someone who's never done anything, I'll actually look at the contractor's experience and we'll put down their experience on the application. Pretty much 5 products, all short-term lending. That's our product. Fix and flip loan, it's a 12-month term, no prepayment penalties, so I mean you can be in and out in 6 months and avoid that interest. The ground up construction, refi with construction holdback. We do cash out refis up to 65%, and then just a straight acquisition purchase that we're about 70% of the as-is value. Again, 85 to 90% loan to cost, can't be more than 70% of the area. Everything based on an appraisal.
So what I hear from these professionals, everybody does have a sweet spot. Are they good at everything at what they do? Yes. Are they great at very certain products within where they're good at? Absolutely. So just remember that we all bring something to the table. It's a great cohort that you have here, okay, of selection. Because everybody's in a different position in an acquisition of a piece of real estate at any given time. Whether they have to close in 24 hours, whether the LTC is a little different or LTV is a little different. And lending one, what I've seen so far, get my head around the matrix that we have with one-time close, short-term rental products. We actually have a 30-year fixed multi-family product up to like a 30-year, okay, which is unheard. I mean, it'll crush the community ribbon cutting that capital way. Okay, one-time close on the Burr strategy, which was very important to me. We have a new construction product, but is there some things that we're good at, and there's certain ones that we're great at? Absolutely. Just like everybody else here, they'll agree with it. It's the sweet spot. Okay, I think you're great at everything. You're great at everything.
I'd say 50%.
You said it, my wife. I'm trying to say you won't listen to me. She won't listen to me. All right. So we're going to go on to we have 2 more questions, and then we're going to open it up to questions as well, because we're moving along real well. This is about really understanding where the market is going, leveraging hard money, construction money. I mean, hard money, I think, is a bad, hard money banks, you get this bad rep, like you're the evil, you're not evil, you're a source to figure something out. And I think because hard money was the term when this all started, it kind of stuck. Yeah, it kind of stuck with it over the years.
Well, that's a great point. It was hard to think bridge. Yeah, bridge, yeah.
It was bridge. I mean, I don't like to call it hard money. I like to call it, listen, are you getting the deal done?
It's not
that's not hard money. And you're willing to pay whatever I tell you, and you're at the closing table to 10. That's not hard money to me then. You're eyes wide open. It's not eyes wide shut. You know what I mean? So you have to keep that all in mind, Mr. Richard. So my next question will start with like, how involved are you in the credit decision of each submission? Credit committee presentations, or you submit and bring it up to the next submission?
I mean, the thing with us is credit is not a major determining factor in loan approval, especially if the exit is sell. We care more about the deal itself, the property, the numbers. Do they make sense? Investor capital to close, because you do need cash for these deals. Sometimes people hear hard money, and there are people out there that do 90 to 100% financing. We don't. But I think sometimes hard money, people think, oh, I don't need any money down, it's easier. You do need cash. Third would be experience, but again, as I said before, we work with first timers. 4 would be your exit strategy, whether you are selling or refining. Now, if the exit is refi, I will ask what's your credit score. We don't have like a credit score that it has to be over this, but if someone tells me they're under 500, I'm going to say it's going to be pretty tough. You're not going to probably refi. It's going to be tough refining our loan. We do a soft pool. And I'm not involved in that. My office does a soft pool, no hard pool. And again, if your exit is sell, we care more about those other factors. So that's a good selling point for a lot of borrowers.
Excellent.
Yeah, I'd say for smaller loans, more fix and flip stuff with nothing crazy or unique going on. I'm running the file from beginning to the closing table. I'd say anything under $2 million.
typically just require like a 600 to 620 or better for that type of experience. But again, as real estate operators, and we kind of put together our lending program based off of being investors, we understand how credit dips and goes up and down. You're doing a project, you got your Home Depot card ran up, you know. So this is why we do a hard pull initially to get a full credit profile, so we can take a look at what is going on with your credit. You know, is there something that's very explainable? And a lot of times we'll, you know, get a story from a borrower and, you know, be able to make sense of it and push forward with the file and get developing that relationship. We like to say we're common sense lenders. So I'm very grateful because I have a lot of people who are much more intelligent than me making these credit decisions, including our CEO. I swear to it's true. Including our CEO, you know, who many times is the final approver on all loans. So we have a credit committee. The nice thing is, though, on Thursdays, and today, at 10:15 to 11 o'clock, we all get an opportunity to talk about deals that might be a little bit out of the box, you know, and make, you know, I'm an advocate basically for your file. So I'm making a case as to why we're going to do business with you. But, you know, and again, I just want to kind of stress that point. You know, being that we are direct lenders using investors' money, there is some credit sensitivity if you're new. We do need to see credit responsibility and be able to, and then there is also a little bit more skin in the game that's required at that point. So, but we have a lot of flexibility in how we can close loans. You know, we just closed a loan today. We talked about an ideal scenario. We're closing a loan tomorrow in 24 hours, based off the borrower having a relationship with us and closed many deals before. So you can have no deals with us, execute on 3 deals, and be automatically bumped into our top leverage and lowest rates just by having 3 deals completed with us.
Maybe took words right out of my mouth.
Hey, we're moving this along. I love it.
No, but basically there's 3 criteria that we actually look into. Credit, but credit has to be like 640 or above. We use a common sense approach to underwriting. Your experience. Now, you don't have to have experience, but if you don't have experience, then you have to have the other tier, right? So you have to either have, you know, decent credit, or you have to have some assets, right? So you want to have no experience, no credit, no assets, and you can expect to right? And we also look at the property itself. Basically, if the deal makes sense, right? One of the things that we do every day is that we have a call, a meeting every day where we have a huddle, and we actually go through each loan. So every single management partners, the loan officers, the processors, everyone gets together and we look at the loans. We say, okay, where's this loan going? What do we need to do to get this thing done? And how can we get it done? Right? So that's one of the things that we do. The other thing that we do is we actually have sales meetings every day at 3 o'clock, where this is where the loan officer, we have a loan officer right there, they'll attest to that. We're at 3 o'clock, right, on the dot, and we're like, okay, here's the situation. It's a little outside the box, a little funky. Here's where the hairs are on these deals. And we actually have the management partners sitting there with us to give us an answer right then and there. So it's like you don't have to wait weeks or days or whatever it is. We can get a response very quickly. So to answer your question, we're very, very invested in every file and the credit. But we make the decisions is our portfolio, so we don't have to go out and get answers.
Thank you. Yeah, sorry, just a quick.
That's all good. He's my partner, brother. Yeah, we don't really care about credit, and I underrate the deal. Next question. I mean, it's pretty good because
Down and dirty.
I'll be on the call with somebody and just looking at the comps and being like, you know, I like this project. Here's what I can do beyond this one. Let's do it. It's literally that grasp test. You know, I'd say 90% of our calls go like that. 10% are going to be like, well, there's a little bit weird thing with this project. I gotta dig in a little bit. But yeah, we don't really care. We're just looking at the asset, making sure it's in an area we like. Which basically means as long as the ARV is above 140,000, I'm likely going to do a deal. That's it. Yeah, we're really young. It's me and my partners. I got 3 partners. We each cover our own area. We're in Delaware, Mark, Philly as well. That's it. You know, give me a call and I'll let you know.
Martin?
So, you know, we're not credit sensitive so much. Like everybody's saying here, very common sense underwriting. Whatever score they like to be is about 640, 650. But what makes us unique is that we can mix somebody's experience, somebody's score, somebody's money. So if you don't, if the main borrower's got a 500 score, but somebody's got good experience, we'll do it. We can be very creative in doing our financing for you. How do we mitigate that with credit? We'll just ask for something that's called interest reserves, which is taking your monthly payments and putting it to escrows and it'll pay your monthly payments. That's how we like to mitigate our risk when we're lending to a borrower, less than a 650 score. My son happens to be one of my underwriters of 3, so we can give you an answer in a matter of 30 minutes on the deal. We like it, we don't like it, what we would need possibly to get it to a successful closing.
So, last question for our panel, and we'll go through some questions. I'm going to take the board from Clubhouse. What's up, man? Everybody on Clubhouse here? Who's not on Clubhouse? Let's go that way. Get on Clubhouse and follow it. Okay?
Really?
Yeah, you're missing out on a lot of good stuff. You're missing out on a lot of activities. Just want to throw that out there. Follow me, you'll find out. Marty, it's number 4, last question. If you were in the audience, what advice would you like to hear, whether a newbie or an expert with leverage construction lending, aka hard money in this market going forward? I didn't know you were over there. If you were in the audience, what advice would you like to hear, whether a newbie or an expert with leverage construction lending, aka hard money going into 2022? Everybody wants to repeat it again as well. What would you want to hear from advice with a newbie or expert?
So it's a great question, Joe. And like I said before, we're all here to network, and that opportunity is talking to the right people so you can grow your business. Real estate is the most successful industry commodity that you could ever buy. Stocks and bonds, you can touch it, you can feel it, it can go up. Bitcoin is going up and down. Yes, real estate will definitely go up and down, but if you look at the statistics, it's going up and it's going up after some time. Real estate will hit rock bottom. That was a financial crisis. Right now today we are not in a financial crisis, we are in a pandemic crisis. So the good thing is prices are going up. Yes, interest rates are low, but in the next year or two, Feds are definitely talking about increasing the rates. So would you rather be buying high and having a low interest rate, or would you rather buy low and have a higher interest rate? It's a good question to ask yourself, but real estate is always here. For personal, I'm not sure what your name is, the guy in the blue shirt for the president? Yeah. I mean, my dad, I won't forget, in 1980 bought a property in Allenhurst, New Jersey. I don't know if anybody heard of it. $80,000. Today it's worth about $3.5 million. So just to show you what properties. I mean, I'm from Brooklyn, and
I didn't know that.
from Brooklyn. So
You never juniors? I digress.
And if you look down the street in your own neighborhood, and especially in Brooklyn, where I come from, you can see properties years ago that were dilapidated streets, areas, sections, and today they're booming, whether it's Staples or a hotel or something that came in there. So it's a strategy. It's a great business to be in, and you should be looking at the long term and not the short term. This is definitely, when there's uncertainty, there's great opportunity. Another thing I want to say is, being a lender, I'm sure all of us guys get this, is, oh, I got outbidded by $10,000, $20,000, $30,000, and I don't want to continue with the deal. But I had the opposite approaches, because they're talking out of emotions. People hate to pay more than they want to. People don't want to get outbidded. It's an emotion. But sometimes I tell a person, instead of making $60,000, you're going to make $40,000. Is that so bad? Or you're paying $20,000 more, but your debt service is this, and your cash flow is going to be that. If you keep the property, at the end of the day, if you're in control and the properties either will maintain value or go up, isn't that sometimes the best strategy to think of? Because I bought properties in the high. My family used to kill me, but thank God I'm a very successful real estate investor myself.
Yeah, I'd probably say the only leverage you need is finding a good deal, because you're going to have more leverage even over us as a lender. You're going to have leverage over anybody you're talking to. If it's the deal, your first time out, we're saying you just found a deal. You're doing a wholesale deal on where you're. He left.
You can't take it.
Right. Maybe somebody else there, but so the point being, you find a deal, you can walk up to anyone who has 30 years experience, 40 years experience, and they're now going to listen to you, right? Same thing with the lenders. Like, people think we have leverage because we have the money, and I guess up front that may be kind of how it seems, but if you come to us with a deal, we're going to now start selling us to you, right? Instead of you selling to us. So you want to move things along in your career, whether it's getting a mentor or making money or getting lenders to work with you, get deals. So just focus on that. That would probably be.
You're gonna make mistakes, and it's okay. But ask your people in your networking group, whether it's your meetup or here or anybody else here. But you're gonna make mistakes, and better to make the mistakes and learn on your own. Than paying these gurus $30,000, $40,000, $50,000 not having a dollar to do your first deal. So
You don't need one guru in one workshop, anything over $1. Being here, you pay $10, you have millions of dollars of options.
And when you're making your mistake, you lost your money. You're going to make sure that your next deal or your next project or your next acquisition, whatever it is, you're going to know that you did the right thing now because you made a mistake before. So mistakes are the best experience.
Very well said. One of the things that actually, it's two things I would say, actually. One, this game is not a spectator sport, right? There's a lot of people out there that would just read, meet, talk to, they're out there, they go into all these meetings and they're doing all the networking and everything, but they're afraid of pulling that trigger, right? So if you're afraid of pulling the trigger, then it's not for you, all right? Because, like you said, you're gonna make mistakes, but that's how you learn, right? So you actually have to go out there, jump in the pool, do something, take action. That's the number one thing I would say. The other thing I would say is that build your team as quickly as possible, okay? Because no one does it alone, right? You would want to do it alone. You would want to buy the property, renovate the property, sell the property, and do it. But guess what? How many of those are you going to actually get done? One, maybe two, lucky. But if you actually have a team, you have a real estate agent, you have a wholesaler, you have partners like us. We love to partner with people, especially when you just start up, because then we actually guide you to getting better deals and better. We can tell you these deals. Hey, this deal is there's not money in it. Okay? Sure, why don't you try something else and so on and so forth. So this way, you're not hurt. We want you to succeed so you can keep coming back. So if you have your team in place and you just pull the trigger, try with a small deal. Get into the game.
I just love to hear what you said. It was very good what you said. If there's somebody that you can meet that's got the experience that'll give you the leverage, I'd rather make 50% of something than 100% of nothing, because that experience is not just giving you leverage, it's giving you the experience. So, think about that. When you said it back, like I said, that Google is 30, 40, 50,000. Your experience, whether it's your parents, they taught you life and everything else too, experience with a good investor will bring you there.
Yes, so this will be an unpopular opinion, but my biggest advice is have skin in the game. Statistically, projects are much more successful when you have skin in the game. You have accountability.
Not your physical skin.
Yes, money. You have accountability to the project, and you have motivation to complete the project. If you're financially not able to make that commitment, see, Eric, the business line of credit, the business credit is providing, whether it's gap funding or just some working capital for your project, from an underwriting perspective, is seen much, much better than even your revolving line of credit on your house, your HELOC or your home equity loan. Anybody can get a home equity loan because it's equity in your house. The bank can take your house in a heartbeat when you don't pay it. But in order to get business line of credit, you need good credit. So from a lender, we see that and we say that's a responsible person. We're going to use that business credit as their cap money. So second thing is, again, and this is my opinion as a lender, maybe it's a little bit easier, we're probably a little biased up here, but there was a great thing Marty made the point about private lenders. Yeah, you know what, they're probably going to give you some pretty good terms. Problem is, they're not going to be able to help you at all to understand your project. They're certainly not going to help you get into trouble with your project, be able to help you out like we can here from lending. We all bring years of experience. We're not just people with money, we're companies with money. We're going to be able to provide you real estate experience and how they complete it, execute deals, grow your empire.
Really thing that resonated with Nick, relationships are going to be key. None of us are competition with one another. We were all having back channeling discussions here, who to stay connected with, absolutely when we move forward. Because this is going to be, hey, I can't get this done. Let me call Ryan. I can't get this done. Let me call Kyle. Kyle's going to call Joe. Joe's going to call Marty. money's gonna fall away. It's gonna be that type of environment to get the volume of inquiry for investors and their deals done. Probably not honor that morning. Only very few.
We honor more articles. Well, that's, and I'm going to say, I mean, that's a good point. Joe brought up, I mean, everybody up here has a sweet spot, and, you know, you all may not find that working with one of us is the right fit for you, and that's fine. I don't think any of us up here would take offense to that. But, you know, we all do work together, and equally, just, you know, we're all here tonight just to make sure you guys have the information that you're looking for.
In this business, we're gonna have thicker skin than the average lender. Okay? We have a little thicker skin. We don't take it personally. It's just business. It's strictly business. We don't want the drama of, sorry, we don't get the days those agents in the room. We don't take in their soap opera and Jerry Springer shit. Okay? Very black and white for you. So it's all out to green. Okay? So just want to let you guys get a vibe of that. Your thing.
I'd say just in a way piggybacking off of what they're saying about you want to create as many relationships with different lenders as possible. The one thing I was going to say is the way you present yourself matters. I always recommend, you know, when I get deals that are maybe bigger deals, a little bit more complex, if you can bring me the same deal and one person says, yeah, I'm going to do like this and this and this and whatever, and then the same person goes, hey, here's my loan presentation package, and it has a pro forma, it has a budget, it has information about their history, and they say, hey, go check out my website, and on their website is previous projects completed, ongoing projects, things like that. I'm going to have a much better you know, feeling about going forward with the second person than the first person, even if it's the same exact deal. And it's also just easier to understand the deal and get my hands around it. So, you know, when you're starting out, it doesn't matter as much because it's, you know, more down the fairway stuff you're going to be doing anyway. But as you grow and try and do more complex stuff, I'm sure Nick sees it with some of the larger construction stuff he does. You know, you don't want someone coming in with napkin math, trying to get a $5 million construction. So I'd say investing in yourself and investing in the way you present yourself and your business, it does pay off and it does make a difference.
I would say know your lender fees. We're all reputable lenders, but I mean, go on Facebook in a lender hard money group and, hey, I'm looking for a hard money lender. You'll have 70 comments underneath your post.
Google account.
So know your lender, know fees, make sure there's not secret fees they're not talking about. Know your contractor, interview 3 to 5 contractors. I mean, honestly, treat it like a job interview. Have them give you a resume, check up on the properties that they put on their resume. When your contractor is doing work on one of your deals, check up on them, announced and unannounced. Take care of your contractors, get them coffee, get them a gift certificate, show you appreciate them. Build a contingency into your scope of work, into your budget on every deal, just in case, 5 to 10% around there. Know your material costs, and yeah, that's about it.
I think you got a very clear and defined idea of leveraging lending, construction financing, commercial financing, mixed use, and multifamily. So we're going to treat this like Clubhouse. I'm sure a couple of you guys will appreciate it. Whoever has a question, raise your hand, your name, and the question to the panel, not to a specific individual, so everybody can give a little answer if they'd like. My Clubhouse colleague. No, he rolled for it. It's lost. Next.
Great. My first question is,
What's your name?
Nord.
Yes. And give your one question right now.
Do you do real estate overseas?
Maybe overseas or out of the U.S. Nobody does. I'll give you one more question.
How to,
But actually, you know, I guess a side answer to that might be if you have collateral here, you can take the funds from there.
I mean,
Yeah. Another country.
yeah, that makes sense.
What's the next one? I'll give you one more question on that. right? That's all Rico.
Yeah, I mean, yeah, I mean, typically you're going to find hard money lenders, bridge lenders are only going to be able to do business purpose lending.
I want to take credit. I'm only one of the Italians on the panel here. One other Italian. Party like Kathy over here. So we caused Italian families of the 20s, 30s, 40s caused RICO laws in the 80s to wreak havoc on not lending on owner-occupied properties and with commercial money. So some of us, I actually knew some of them, or old enough to know some of those guys that were around here in the 80s. I am one of them. I grew up in Kenilworth, basis of Sopranos. So that was a big full RICO cleaning in Kenilworth back in the 80s. But we can't do owner-occupied. This is all, everything we're discussing here is non-owner-occupied. So the gentleman that raised his hand first, did you have a question for the panel? Your name and your question.
Yes. Sorry.
Your name and your question. You have a name?
It's
It's in his notes.
oh,
It's in his notes. You give somebody else's name. What's your name?
no, JT.
JT, what's your question?
So actually, it's a two-part question. So we actually, the first question is for, what is it, DLP, right?
Well, it's for the whole panel, so it's a question for everybody.
It was pretty much referring to the line of credit. That's the reason why.
I'll put you up first.
Yeah. So does anybody else do a construction like that? I do, but it's a little different. Marty does. We all,
Okay.
a couple of us have a sweet spot for that.
So the line of credit is actually, what's the maximum that they actually offer? And then on top of that, is there like a cap? Because I've seen like differences between like a $200 cap, $200,000 cap, or $250, or even $300 on just on specific property. They give you like $1 million.
That's going to be not a question for us to fill. It's not as easy to give that in this discussion. So I would have it all back channel discussion when we're done, Marty, Nick, or myself.
Okay.
We all kind of have a different flavor to that. Does anybody ever, but don't leave till you talk to us. Yes.
My name is Josh.
Josh, thank you.
Earlier, you kind of mentioned you try to avoid areas where lending or deals. You try to avoid areas. And which areas are those? Or which areas in general?
Yeah, I guess because I mentioned the ARVs when I mentioned. So typically we're looking for ARVs at repair values of above 140,000. It's not a hard and fast rule, it's just kind of a ballpark to send out to you. There's multiple reasons why that's the case. Sometimes it's just a tough area. It could be like a drug area. And usually how much property is worth could be an indicator of that. I always say just send it over, let me take a look, and sometimes I can still do it. But it just depends on kind of the risk tolerance of the lender. Not everyone's going to be saying the same thing to you on that. Generally speaking, probably you'll see that across the board for lenders, like there's just certain areas, but it's mostly going to be based on like the ARV that you're looking at. I guess that's the answer. It's just mostly look at the ARV.
Most of the lenders have minimum loan amounts, whether it's a straight purchase, turnkey, and or if it's a construction loan, we prefer. Meaning an accelerated actual zero value. I think all of us in the first strategy would say 140, 150 construction loan. Right?
I can do a $1 one, but the ARV's got to go.
We're talking about bridge.
Yeah, right.
Yeah.
Per month 75 on a straight purchase, loan amount. That means the buy has to be $100,000. So on construction, I like to have, I'm doing CML loan grease, whether it's $100,000 construction purchase loan or $500,000. I mean, it's almost a time value risk factor all wrapped up in one. Are there certain markets I stay away from because I don't really believe the numbers that are coming out? Yeah, I can tell you, but I don't complain them out loud because then I'm going to be discriminating against those towns. But if you called me and said, hey, Joe, what do you think about this market? I'm going to say, I go to another one. Maybe just buying cheap is not always good. Buying smart is doesn't always mean buying cheap, buying smart, buying smart. I mean, I'll give you a really good example. My first acquisition in 1993, you probably weren't even started. You were like a startup guy. Okay? I bought a 4-unit across the street from King College. And, you know, the Manor was there for catering, you know, softball field, all the girls' softballs. You know, my whole focus on buying that 4-unit was women. Okay? What had nothing to do with anything else. Okay? And I converted it. Okay, and then there was no other objective of buying that 4-unit. Okay, and then I converted it to a 5-unit. Just went down to the zoning department. You know, I had enough parking. It wasn't like this big ordeal like it is. You know, fast forward 30 years later, you're like you need every lawyer in the world to get that thing approved. I just went down. I had my real estate attorney draw up some things. Get my structural engineers. I was doing short-term rentals in 1994. The STR term didn't exist. House hacking didn't exist. Burr didn't exist. It was called common sense. So, you know, common sense, we're common sense lenders. Does that make you feel a little more comfortable? It's common sense. We're not going to loan on a $40,000 crapper. You know, it's not worth us deploying the money.
There's a couple things to consider though, as far as, you know, from our perspective, and I'm sure this goes across the board, is that, you know, appraisals are key, you know, in us establishing value, and I'm sure many of us can close without an appraisal, but it still depends on it being common sense. If we have a property in the middle of nowhere and there isn't a single comp within a 25-mile distance,
you can't make one up.
We're going to say to you, hey, listen, we're going to struggle with this, you know, because I can't get it.
Right. Rural gets tough. You know, urban suburban.
Right, and that's when you might run into issues.
Rural gets a little tough. You know, when you're going to do the Poconos, be very careful how far you go out. You know, the more elk you see, the less likely you're going to be able to get a value. You know what I mean? So just keep that in mind. We have a question right behind you. Your name and your question.
Hi, Jason. I'm from Bank. I have a question for the panel. I was wondering what you guys do with, what each of you guys do with your loans. Are you guys balance sheet lenders, or are you aggregators, sell them off? Next question for each.
You say you're from a bank?
Sorry?
You say you're from a bank?
Yes.
Okay.
And what was the question again? What do we do with
What do you do on the balance sheet lenders? Do you sell them off to no buyers, aggregators?
Yes.
Yeah, I mean, we do a little bit of everything. I actually speak with Jack Adler. I don't know if we've spoken before.
Yeah.
But yeah, you know, so we you know, we'll look to groups like you to leverage bigger size loans. And then, you know, the smaller fix and flip type stuff is mostly balance sheet. Stuff that groups like, so what he's referring to, Cross River has a lender financing program. Lender financing seems to be growing more and more these days.
I want to add to that. See, the community bank, which is, I call them the ribbon cutting banks, they're not going to go away. They're just going to consolidate, and they're up against 30-year money across the board. So the problem they're having is they only can do 5 or 10, 7-year money, you know, maybe on a 20 or 25-year amortization, where the hedge fund money is supporting us with the insurance groups, the family offices, or whatever group is backing our backbone of this personal cash is doing 30-year money. And that's where, you know, there's still always going to be a place for community banks. There's always going to be a place for a credit union. You know, there's going to be that loan that we can't touch because it's just not in our wheelhouse.
Yeah, so I said the lender financing industry is growing quite a bit. I think more and more lenders are going to start to utilize that, but it's always nice when lenders have, you know, if it's something that I go to Cross River to leverage us with, they say no, we have the money sitting in our checking account anyway, and we'll just...
Now, will you carry a pursue with them on something like that, meaning you can go and both simultaneously?
No.
Okay.
Well, not in the same deal, it will be a separate loan agreement.
Yeah, so I would suggest, I've had for other guys on here, if you're ever interested, I've had a really great experience dealing with Cross River, and if that's something you guys are interested in.
I'm seeing some area pursue deals happening, meaning where two lenders say, hey, listen, I'll put my money in, you put your money in, we'll take title at the same position first. It's an old expression, but it's back. All the old expressions that were like whispered in the wind, digital blanket loans, asset-based lending, loans, all that stuff it's insane. Everybody has it. It's like, you know, we fall. I mean, when we were down there, how many people were on top of each other doing the same products? I was dizzy by the time I walked around the. Thank God I went when there was nobody in the room at the exhibitor hall. I would have been dizzy. It was just too much. It was like going to a burlesque, seeing so much women that you just tired looking at women. You know, it was just like crazy. I got exhausted from it. Okay, you couldn't take it anymore. Everybody does LLC loans. Everybody does bridge loans. Everybody does hard money. Everybody did anything non-owner occupied. I have a stack of paper from the exhibit hall. Literally, I think they all went to the same printer with the same content. Do you understand how crazy that is? That's what we're up against, right? I mean, am I making anything up here? I mean, it's full. Everybody's out in full force. I didn't see one resident. I felt bad for 2 residential booths out of the 80 commercial booths. It was ridiculous. I mean, Marty, can you give a little idea what these guys? Kyle was down for a minute. I was down for a minute. But what would you say?
They're offering also very similar. What are you offering on an unoccupied?
The threes.
So I could also be
Right? So we get on the phone first.
and like doc versus full doc.
Well, yeah. I mean, listen, if you want to send me W-2s and tax returns, I might do a little better. But I don't need them. None of us need them.
Talking about the 30-year program.
Yeah, they're in the threes right now. I mean, you got to remember something. Your top 10 hedge funds in the country, in the world maybe, are in the real estate business. Blackstone just acquired 18,000 doors in the Midwest. You know about that announcement last quarter. They're in the investment business. They're your competition. You're going to get their scraps. You're not competing with Blackstone and BlackRock buying 18,000 doors. Okay? I mean, it's just numerically impossible.
Blackstone's not competing with anybody.
No, there's not exactly.
Yeah, I mean, you don't have to worry about worry more about iBuyers. That's more.
Yeah, you're finding the fallout of the opportunities, and there's going to be a lot of money on the sidelines. You keep your credit strong, you keep your cash in place, you stay bankable, you have some background, 3 to 5 deals in your background in the past 24 months. You are rocking and rolling into the second quarter when this market works in your favor 100%. There's massive indicators in a market. One is the condo market. It was changing before the pandemic. They just literally pulled the rubber band back. It's back. The condo market is coming back now. Your Jersey Shore market corrections, which is an indicator across the country. Jersey Shore is one of the indicators. Market corrections across the board by 20, 30, 50 grand, except maybe Margate and Longport. Everything else, and Cape May. Everything else, there's market corrections. Wildwood, everywhere, all the way up to Kingswood. But I won't give the secret place away that Kyle's buying right now. But okay, so that whole Jersey Shore is a massive indicator. Your urban markets are turning. Days on the market are up. Less offers are being made on properties. It's all indications to the urban. Crime is up in the cities. So the only play to go back in the city is being 25 years old. I'm in the 50s. I'm not going back. I'm going back with a 9mm. Okay? I'm not going that. I'm looking for safety and comfort of the homes. I'm moving to the suburban markets. Okay? So that Amtrak that was racing back everybody into the city did a complete reversal during the pandemic, and everybody downtown USA is back. The small communities, their retailers are going to decline. New York, Philly, Boston, massive blocks of changes of empty retail. Tech is coming in and buying properties already at 50, 60 cents on the dollar in New York. Google just bought one for $2 billion, just announced yesterday. Pay attention to the news, Mortgage News Daily, CNBC. Stay affluent of what's going on in the market. On Clubhouse, I have higher level Clubhouse groups. You want to go look about Ponzi and learn about bullshit, go in the morning. You want to come see real deals, come in the afternoon. The CRE news, good commercial news. Like we're having a discussion tomorrow on senior rental housing, which is your new A and B, Class A and B rental market for the next 5 years. That 55 plus environment, right? I mean, who wouldn't want to rent that? It's kind of the most secure rental on the Class A. What's a 55 to 65-year-old person going to do when that's clean it? They're going to clean it. Okay?
That's the difference. I have seen a lot of.
Well, you just get Scott to clean it. That's what the difference is. It's all right. So one last question, Chuck. Is it your name, Chuck?
Yeah, I mean, somebody else is going.
Okay, well, we'll go ladies. We'll go this young lady right here. Your name and your question.
Okay, my name is Maurice, and the first question I have is concerning the contract experience. interview with them, I don't really know because I'm an interview. Like, what are you looking for when I'm in an interview with them?
I would ask them how many projects they've done similar to that. You can ask them for references. I vet all the contractors that come through on projects, so like I'll Google them and see if they have, like I was saying before, I'll see if they have a website, and that usually can give away a little bit. Are there good contractors that have absolutely terrible websites? Absolutely.
No website?
Yeah, I mean, my best friend owns a construction company. I'm yelling at him all the time.
The biggest,
sorry, no, I was
the
gonna say.
biggest key is don't make it one person you're interviewing. If you're interviewing contractors and you're starting out 3 to 5 of these.
And then the other thing too, make sure when you're looking at their quotes and their proposals, make sure you're looking at apples to apples, that they're putting the same thing on that quote. So one guy might come back at, 75,000, the other one's 50,000, but he didn't mention that he's not putting in, all the electrical fixtures. He's letting you put in this and this, and that yourself, or maybe you're supplying some materials for the other one. So you have to really look through those proposals that you're going to get from them and make sure that they are actually the same things. And if they're not, you just go back to them and say, hey, I'm looking at a proposal where they put in a $3,000 allowance for appliances. Can you, put in a package for me for the appliances as well in your quote? They can go back and do that.
How does that associate with you guys? Do I need to show anything to you guys?
Let me check that. I would actually piggyback off what you were saying also. If you could actually, if you have the time, and you could actually go out and visit one of the jobs that they're doing, and actually eyeball it, see what kind of work they're doing, that would be great, right? To see if they're doing a shadow job, or if they're really like sticklers and get the job done the way it should be done. Because a lot of times when they send you a portfolio, they send you a website. The website can be beautiful, but then how do you really know, right? Until you actually deal with it. One of the things that we like to do, one thing that we do, we know that that's a challenge. Contractors are a challenge. So what we do is we actually have a VP of construction that is in-house, that's been in the field for 30 years, that knows, that has a ton of contacts, the whole thing. So what we do is when you send us a project, we have them, you or them, the contractor, give us a budget to say, these itemized, this is what's going to cost to get this job done. And our VP of construction would actually physically go out there and vet your contract for you. So he'll have a conversation with that person and say, hey, what are you doing here? How are you doing this, so on and so forth. So that'll be that little extra guardrail that you need to make sure that that contractor is going to do what they have to do, because he has to sign off on that contractor's work, and the draw can't get done until they actually get the job done.
I was just going to say, the lender is going to look for the proposal line item budget, and also just make sure you get license and insurance for the contractor. If they're weird about that, that's a huge red flag.
That was the last question.
Okay. For the Airbnbs, what would you need from me for here in Jersey or other states to open up more?
I'll go with it, Marty. Do you do SDRs yet, or? You want to answer that too?
So that's all. So the Airbnb is really as simple as doing just regular 30-year fix for us. Okay. We would need, again, everything is based on the company. So we use the company's bylaws. The normal works for the company itself, because it's a governmental lines. The only difference between an Airbnb and like a traditional 30-year fix for us, like I said before, is the fact that we can use the income as if it's the higher income for Airbnb, as opposed to just doing, like I say, the STR is 1.225 on the regular. We can go a little bit higher because we're not using leases or cash or checks, because we know it's a seasonal situation, and we know you get more money as a seasonal situation, so we structure it that way. So you can qualify for more.
So are you looking at historical rent, or are you using
Yeah, we basically use that, the appraisal gives us the properties.
I'm just saying, if you have a T12, it's great, or we're going to do a renting area, or we're going to look at a comp of the STR, that medium
market. We're gonna take a deeper dive, and we're gonna look at market rent too to make sure, we gotta make sure you're not over leveraged, so if you have a donut 1 month, if you had a market rent that thing out, you're still covering yourself on debt leverage. We're not gonna put you at 80%, and you technically, that place really doesn't support more than 65. Now we're back to 2008 mortgage collapse. We're not a part of that.
Right, so we just want to make sure that.
We already have our wounds from that.
So we can't just go by word of mouth and say, hey, this is gonna be like $5,000 a month, you know?
I mean, I'm 18 years old, I'm the victim of the mortgage crash, you know what I mean? Yeah. Listen, no one's bringing leprechauns and unicorns to the debt leverage of giving you unrealistic terms. We are gonna all hedge our bets that you might fail. Okay, that we're gonna take back that loan sometime in the next 24 months because you didn't feel your numbers correct. So we're gonna look at that level of risk, and especially in the STR, Virgo market, Airbnb, we're gonna take an extra look. This is your first Airbnb. Why in the hell would I over leverage it? Just think about the common sense behind that. It doesn't make any sense, does it? Well, it's such a great deal. I just took this class by so-and-so for 25 grand, and he told me there's somebody that can fund this. I don't give a shit. They go get the money from him. He already has your 25 grand. He's got your down payment. So that's fine. Do you understand where I'm going with this? It's common sense. We're all old enough to see, we've all seen 1,000+ submissions to our lives. 1,000 in the past 18 months. Not in the past 20 years. In the past 18 months. Everybody in this table has seen 1,000+ scenarios. There's nothing that you think you know that we don't already have seen. So it doesn't matter. It's okay. Everybody's got a story, but at the end of the day, we're all very bullet point oriented lenders. The only question I have, if you're closing a deal in 24 hours.
I just got.
I think it's wonderful. How are you handling the GCS?
What's the GCS? Well, it depends on. It's really just us.
I'm not going to call you out.
No. We know how much a project should be ballpark, right?
You do it by the square?
No. We do it by the area you're in, and if you're doing 1,000 square foot house, I know, all right, a full rehab is going to be like 30,000 here. And if you told me your budget's 10,000, we got a problem, right? So.
It goes for wholesalers. So I'm not trying to knock wholesalers, but typically the repairs
depending on your wholesaler, yeah. Exactly. But if you're like, it's 25,000, I'm like, all right, I think you're short, but you'll make that $5 grand work, right? So it depends. It all depends. And if you're looking at $1 million house, you say it's going to take me 300,000. I'm like,
I know what you're saying. You know what I mean? This doesn't make any sense.
Exactly.
So it's common sense approach again as well.
Yeah.
So listen, we have a lot of intelligence out here, a lot of good strategists. We really hit the 8 o'clock market. If you have any questions, you gentlemen, we'll be kind enough to stay a few minutes afterwards. I want to thank everybody here. Your engagement was excellent. Please follow us on LinkedIn, Facebook. We all have active events.
Clubhouse.
I don't want to. Anybody want to follow me on Clubhouse and get involved? I have one of the largest burst strategy clubs. I have the only burst strategy club on Clubhouse. It's called Creative Burst Strategies. If anybody wants to be featured, you guys are more than welcome to come up and collaborate with me. And we average about 150 to 200 people across the country in my rooms, Monday, Wednesday, Friday, and now Saturday and Sundays. They're 1 hour, an hour and a half. I can't shut up. And we move it really quick and very powerful. You gentlemen are all invited to be on that with me. There is no competition. The only competition I see in this room, you go to the bathroom, you look at the mirror. That's it. Everybody have a great night. Be well. We'll see you on the first Thursday in November.
Thank you.